Welcome to the CLS Monthly Market Review. I'm Scott Kuby, in for Nick Rowert. Joining me, as always on the monthly, is Chief Investment Officer Rusty Vanneman. Rusty, welcome.
Scott. Thanks.
Yeah, glad you're here. So, February just wrapped up. One of the best months we've seen in a long time. What drove performance? What happened? Why was it up so much?
Well, as you know, there's always a lot of factors causing the markets to move. I think in the U.S., which was a great month for the stock market, I think that probably the leading variable is that even though economic data came in generally below expectations, I think that investors realize the Federal Reserve is not going to raise short-term rates as quickly as they once thought. And that's generally a positive for the market. Now, overseas, the international markets, particularly the developed markets, had a great month. And there, of course, central bank policy is part of it. But in that case, the economic data was better than expected. So it was just a great month for the global markets, and our portfolios benefited.
Speaking of international, we've seen some momentum, a lot of movement into international ETFs by investors who seem to have recognized the asset class. You've been talking about it for a while. What are your thoughts on that movement and where the opportunities still are?
Well, there's been a lot of inflows into international ETFs so far this year. I mean, it's really been gangbusters. And it's actually in the one area, currency-hedged ETFs, an area that you have been on from the very beginning. You know, I think these are pretty neat ETFs too, but I think they should be used tactically. So for shorter term use, which means that if the dollar appears to be cheap or oversold, would be a great time to use them. And I just don't think that's the case now. I just don't think it's a good time to initiate positions or add to positions. The dollar does appear to be fundamentally overvalued now, and I think it's also technically overbought. You can look at a variety of different things, like momentum is a big argument for currencies. And I think that momentum has dissipated for the dollar. Last time the dollar index had a high was over a month ago. And I think that the momentum argument has pretty much run out of steam.
So with currencies, the trade feels crowded, but it's had some really good momentum. How do we use momentum in our strategy and compare that to other things we look at?
It's great. Well, at CLS, we use a lot of different factors in what we do. Probably the two most important are valuations, which really kind of have a longer-term orientation. Our portfolios are usually tilted towards attractive relative valuations. But we do also use momentum. Momentum is kind of a shorter-term thing. And again, to define what momentum is, it's the notion that what has done well recently will continue to do well, at least in the near term. And important time frames includes like a 3-month time frame or a 12-month time frame. A lot of academic support for momentum. And I would like to kind of put in a plug, which I think is a great resource for advisors and investors alike. What recently came out is the Credit Suisse Global Investment Yearbook. I think it's just, again, a great resource. It has a one-page summary on all the global markets. That's neat. But it also has articles each year which are highly relevant to asset allocation. And one of them this year is talking about rotation strategies and how valuation works and also how momentum works. So just more proof that those type of strategies work. And at CLS, our portfolios take into account those factors.
That's a great summary and all the different things that we look at. So that does it for this week. We appreciate you tuning in and thank you for your time and trust in CLS Investments.